Welcome back, everyone. Have you ever looked at the cash in your wallet and wondered if it's slowly losing its power? Meet Maya. She's staring at her savings account, completely unaware that behind closed doors, a massive economic shift is unfolding. While Maya holds on to her traditional paper bills, institutional giants and global central banks are quietly doing the exact opposite. They're panic buying physical gold at a rate we haven't seen in decades, sweeping it off the market behind the scenes. Why are the world's most sophisticated financial players abandoning paper cash for heavy, solid gold? Jordan, an institutional manager, knows that the global currency system is showing deep structural cracks. He isn't waiting around for a crash. He's quietly converting billions of dollars into gold bars. Today, we're going to pull back the curtain on this underground escape, revealing what these financial elites know about the future of money. To understand this panic, we have to look at the global standard, the U.S. dollar index, or DXY. Right now, experts are projecting a massive 6% depreciation in the dollar's purchasing power. Imagine Maya holding a giant paper dollar bill under a magnifying glass, watching the edges slowly curl and dissolve into thin air. Where is that value actually going? It doesn't just disappear, it flees. When the world's primary reserve currency weakens, it sends shockwaves through global markets. Every single business, bank, and government holding cash suddenly realizes their wealth is slowly leaking out of a rusty bucket. Jordan and his institutional peers see this 6% drop as an absolute emergency. They need a safe harbor, a monetary shield that can't be printed out of thin air by a central bank. That's where the historic pivot to physical gold begins. For decades, big institutions like Jordan's bank used a reliable safety net, U.S. government bonds, specifically the 10-year Treasury yield. Think of these bonds as official government I.O.U.s that pay a reliable interest rate. Maya used to think bonds were the ultimate risk-free investment, but today, those yields are falling sharply. When Treasury yields drop, these paper promises pay out far less real-world value, especially when adjusted for inflation. Suddenly, holding government debt feels like holding a melting ice cube. Big money managers look at these falling yields and realize they are actually losing purchasing power by playing it safe. This forces them to abandon bonds entirely and seek an asset with zero counterparty risk. Gold doesn't pay interest, but unlike a government bond, it can never default, go bankrupt, or be inflated into worthlessness by a printing press. This brings us to the core of our economic reality, a powerful metaphor playing out in real time. Picture a giant, elaborate paper dollar bill acting as a fragile bridge over a dark, rocky canyon representing the global economy. As inflation and depreciation intensify, this paper bridge begins to dissolve, crumbling into useless ash. Maya is standing on this bridge, feeling the ground give way beneath her feet as her paper assets fail. But look closely underneath. A massive, heavy, solid gold bar, gleaming with a vibrant golden hue, rises up from the canyon floor to catch the falling economy. This gold bar represents thousands of years of unchanging, tangible wealth. As the paper system disintegrates, the heavy metal foundation stands firm, absorbing the impact and protecting those wise enough to stand on it. It is the ultimate historic buffer against fiat collapse. Because of this massive institutional rush, gold has been quietly crushing the market, propelled to consecutive all-time highs. Week after week, the price charts break through previous ceilings, yet you barely hear a whisper about it on mainstream news. Why the silence? Well, while Jordan and central banks are buying gold by the metric ton, Average retail investors like Maya are completely left in the dark. They're still chasing volatile tech stocks or keeping their hard-earned savings in depreciating cash accounts. This creates a massive, unprecedented gap between what the institutional elite are doing and what the public sees. The smart money is quietly building a fortress of physical gold, preparing for a major structural shift, while the average saver assumes everything is business as usual. It begs the question, who is really making the safer bet here? So, what is the ultimate takeaway for you and your financial future? You don't need a central bank's billion-dollar budget to protect your purchasing power from currency depreciation. Maya is now stepping off the crumbling paper bridge, choosing to allocate a small, sensible portion of her savings into physical gold. She is transforming her depreciating cash into a personal monetary shield that government printing presses cannot touch. By understanding what Jordan and the major financial institutions are doing behind the scenes, you can make informed decisions today. Gold isn't about getting rich quick. It's about ensuring that your hard-earned wealth survives the slow, inevitable decline of paper currency. The big players have already made their move to escape the underground collapse of fiat. The real question is, will you protect your savings before the paper bridge completely dissolves? As always, appreciate you hanging out today. See you in the next one.